Hello everybody. I am Daxesh Kothari. I am the Managing Director and CEO of Ashutosh Financial Services Private Limited. With me today is Mr. Niket Shah. He is the Vice President and Associate Fund Manager of Motilal Oswal Mutual Fund. He is with us today. We are fortunate he is in our office today. And what we thought is that we want to discuss on the coronavirus, which is a topic which is up in our minds, and the impact of it on the Indian economy and on the Indian stock market. So to start with, Mr. Shah, what I was thinking is that let us base our discussion on this coronavirus with a little kind of an assumption that presently it has not impacted India as such.
Sure.
So it is predominantly in China, as we know, and it has spread across some parts of the world as well.
Sure.
So let us go with the assumption that it will be in this kind of a state. Maybe it will not come to India. If it comes to India, then the entire situation, as we all know, would change drastically, and we really don't know what's going to happen. But if it remains the way it is, and maybe a little up and down, and it continues for a little period of time, then what impact it could have on the Indian economy?
Sure. So I think there are two parts of the question. The first part is, I think, if you look at what has happened with China, and it started with China and then went to outside China, a lot of countries got impacted. So I'll talk about two things. First about the virus first, and then kind of come to the Indian economy part. So if you look at, it started with Wuhan majorly, which is the epicenter of this entire event. And we have seen that within China, the numbers are now stabilized substantially, right? So we're now seeing about 300 odd cases in terms of addition, which is happening within China. And hence, in fact, my interaction with a lot of people have been saying that a lot of Chinese factories outside Wuhan, which has already started operations in the last week, and some of that will also happen in this week. However, capacity utilizations for some of these factories will take its own sweet time to reach back to 80-90%. So, but my sense is broadly about anywhere between 40 to 60% would be the capacity utilization today within companies outside Wuhan as such. So my sense is some of that impact, the worst in terms of what's supposed to happen with China looks to be behind. Having said that, in the past we have seen cases where, in cases like SARS and all, we've seen that there's always a round 2 which happens. So it relapses to the existing people. Now that can be a bit of creating some kind of panic situation if that happens. But my sense is, for the moment as we speak, things have stabilized in China. In fact, they're improving only as every day, whatever data that we kind of get to. The real action is happening outside China, where there's a lot of panic which is created. But I think one thing which everyone should understand is what China has been able to do in terms of arresting this, in terms of quarantining geographies within China. My sense is, I don't think a lot of other countries would be able to move so swiftly the way China has been able to move. And hence you've seen countries like, South Korea getting impacted. I mean, if you look at last week itself, South Korea had, less than 500 kind of cases which were infected. Today they have crossed 3,500 cases. So it's spreading pretty fast within South Korea, Iran. You have Japan, which has announced closure of schools for about 3 weeks. The impact in some of these countries is that even if you have one case within a particular plant, like for example, you look at cases like Hyundai, you look at cases like Samsung, which are there in media articles, you've seen that even there are 1 or 2 people getting impacted, the entire plant gets for a closure. Right? So that kind of impacts a bit of economy on the global side. The travel is clearly got distorted, right? So my sense is, if you look at some of the, travel within the countries and travel outside the countries to newer countries. So for example, anyone going out from China is clearly, there are a lot of countries we've put there, which have already put some bit of ban in place, temporary ban in place. But still there is a lot of tourism, or a lot of people who are still traveling outside from, say, South Korea to US, Iran to US. I don't think a lot of action has still happened on the ban side as far as those countries is still concerned. But I think tourism as such has taken a big toll. Airlines have taken a big toll. So I was just reading an article which said that cumulatively airlines have lost about $29 billion in terms of revenues, which is a very, very large number. And I don't think any of those situations is going to improve in the near term. I think tourism has taken a clear big hit. Now, if I have to put that into context and kind of look at India as an impact market for us, so there are 2-3 things within India. First, I think if you look at sector by sector, right? So I think IT will clearly get impacted, because what happens is you have a lot of people on site working for IT companies, and clearly new deal wins become a bit of an issue, because during new deal wins, a lot of clients do come to your office, look at the development center, and then they kind of sign contracts. And you've also seen a lot of people moving outside India to visit clients for, client mining, which is basically you have an existing account, you want to mine them up, and you want to increase the size of that account. So I think all of that travel has come to a halt. At the same time, when you have airline companies and when you have large hotel chains, all of them having a bit of a drain on the cash flows and sales, incrementary deal wins kind of get postponed as the spending kind of gets reduced. So that, in my view, will have some bit of impact on the IT space as such. I think we have seen auto companies clearly announcing some bit of impact, but the impact can be minimum. It might be in the range of 5 to 10% in terms of sourcing from China. And that impact, in my view, looks like to be temporary, because as I said, some of the Chinese factories have come back to operations of Wuhan. So I think this is going to be more transitional for a lot of the auto companies, and I think things will evolve and improve, I think in a 2 or 3 month period. Apart from that, I think there are a lot of other sectors where it appears that you are buying from an Indian vendor. But the case is that, for example, if I am making fans, and if I'm buying components from my vendor in, say, India, he is buying some component from China. And that kind of becomes a N-2 kind of a situation where N-1, N-2, I think at some point in time, there is some correlation with China. That kind of tends to impact supply chain. The good part for India per se, in my view, is all this has happened closer to the Chinese New Year. And typically, because China goes for a New Year celebration, lot of Indian vendors typically tend to stock up, before the festive season goes into, before the festive season starts. And hence, I think a lot of companies still have inventory till March, and some of them also have till month of April. So my sense is, as China starts back again, there can be some minor temporary supply chain management issues in some of the sectors that we spoke about. IT can remain a bit elongated for, I think, next 3 to 6 months. But I think auto should come back. Most of the other sectors should come back. Chemical should kind of come back. Pharma should come back. In fact, recently there was one large air conditioning company which hosted a con call, which clearly said that for us, sourcing of compressors, which was supposed to get impacted, we are seeing some of the Chinese factories starting and kind of dispatching it, and they should get the dispatches in the next week itself. So I think the assumption which is made that China is at a complete standstill, things are just not moving, is incorrect. China has already started back last week in selective spaces. In fact, this week, Hong Kong, most of the people in Hong Kong have resumed offices again. But the impact outside China can be quite dramatic. From the perspective of India also, I would like to highlight that there are a lot of companies where large amount of their revenues come from outside India, whether it is Europe or United States. Those companies, in my view, can get impacted in the near term, and that impact can be anywhere between 3 to 6 months of revenues, because auto sales have got impacted in China, auto sales have got impacted in Europe. If you look at the China PMI index data, which came just a couple of days back, the reading was about 35. Normally, they are close to about 50 plus. So 35, I think, is the lowest that we have seen in last multiple years from China. And it kind of clearly highlights that the whole economy within China was at a kind of a standstill in the month of February. If you look at some of the large beer companies, they've recently hosted some con calls where they've clearly highlighted that February their sales were down about 70-80%. And they've started seeing things improving as far as manufacturing is concerned, some bit of pickup happening. So I think globally, while things are very, very uncertain and a little panicking in certain countries outside China, I think India is completely insulated. If you look at some of the historical data of some of the other epidemics which would have happened in the past and how India would have reacted with them, our multiplier would be 0.7x, right? So if any part of the country would have fallen by, say, 10%, we would have fallen by about 7%. So to that extent, I think India has done far better in the historical past also. And my sense is that as a country, given the fact that we have such large amount of manufacturing now also happening within India as such, and we have decent amount of inventory for the next 1 or 2 months, we should be okay. Having said that, if these things accelerate once again and kind of relapses once again in China, and we have one more round which kind of clearly goes through, then I think the impact can kind of magnify again once again on a supply chain side. But I don't think it's going to impact dramatically, to any of the major sectors apart from IT, to the best of my knowledge, and any companies which are depending on export revenues.
So, two, three things which are going on as a lot of discussion, as a part of lot of discussion in India. First thing being that tourism as such, Indian revenues or the part of contribution of Indian GDP coming from tourism as such, or maybe an airline, or for that matter, everything, tourism as such, is, insofar as India is concerned, is quite limited.
Right.
So people looking at these things in a little, in a little positive or a little different way, that that impact would be minimal. For the other Asian countries, it might be a little more, because they are a lot more dependent on tourism. The another thing, whether those discussions which are going on, that now of whatever has happened in China, manufacturing to a certain extent might revive in rest of the world, and India being in a certain advantageous position insofar as the cost part is concerned, it might be a little revival of manufacturing. That is one. And the another thing, that the soft commodity prices, which have been on account of the impact of slowing down of China, that could be to the advantage. So, are these things which we are talking of in terms of revival of manufacturing or these commodity prices remaining soft, are these things you seen that they are a little structural, which would happen on the advantage side of the Indian economy, or is just momentary and things will be the way they were earlier or something like that?
So I think you've kind of really highlighted and articulated pretty well. I think on manufacturing side, clearly there's a significant advantage that Indian companies will face. And you can look at sector by sector, specifically within manufacturing. So let's look at chemicals as an example. We've seen capacity utilizations of chemical companies moving up. The level of inquiries have gone up dramatically, because most of the US companies which were, say, initially sourcing from China have to really move to an alternate source in a situation like this. And hence India becomes a natural advantage position. On the cost side, I think it appears to be that this is going to remain for the next 3 to 6 months, because China doesn't come back with a J-shaped recovery. Things will slowly and gradually evolve, and hence I think commodity prices will continue to remain low, because China is itself a largest consumption of some of the large commodities. So whether it is crude, whether it is metals, I think we have seen significant softness, and I think that will benefit in terms of better gross margins for companies in the foreseeable future. I would say next couple of quarters for sure. So my sense is that India should take a huge advantage of this, and I've already seen early signs. We've kind of seen across sectors early signs of some inquiries moving up. And I think incrementally within Indian companies also, there is some bit of realization that we have to find out a solution over a medium to longer term. Like if we are too dependent on China, we have to have a plan B at some point in time. So these are, I think, learning curves for all of them. And I think within India itself, I would say a lot of companies are now thinking that can we have another source of operation in case something goes wrong with China in the future. But the cost of China itself is so low that it's very tough for any other country to match it up. But I think, from a risk mitigation strategy, I think one has to really do that. But on the Indian manufacturing side, yes, clearly, I think capacity utilizations for a lot of sectors within India is still, less than 75%. Clearly, that can clearly ramp up. Having said that, I was speaking to some chemical companies, and clearly they highlighted that although there is significant amount of increase in inquiries, but still somewhere the raw material comes from China. So you still kind of stuck in a catch-22 kind of situation, where although you have a large amount of order base, but some or the other way the raw material is still coming from China. But structurally, I think this is a great thing to happen for India, because incrementally, if you are a US company, you would think that, I need to have another alternate source of supply.
Multiple sources at least.
And that, I think, over the next 5 to 10 year period will continue to happen. This is also happening at a time where we have lower, corporate tax rate if you put up a new capex. So I think we will see some of that action also happening, towards India. A lot of compressor guys are coming to India. We've seen some of that also happening in the last 1 or 2 years, where some of the companies like Highly and all have set up manufacturing capacity in India. So I'm extremely excited about what is in store for India for the next 5 to 10 years. Whatever has happened is extremely unfortunate, and this is a very evolving thing. So as you rightly said in the beginning, if some of these things come to India, then it becomes even more tougher for us to quarantine anyone, and then it kind of really disturbs everything, right? Whether it is auto sales or whether it is tourism or whether it is manufacturing, everything will get impacted.
Yeah.
What happened with other countries will happen with you also. So my sense is, yes, on a manufacturing side, there will be certain sectors which will clearly take some of that benefit. I don't think a lot of sectors like say auto, for that matter, cannot take the benefit of this, because ultimately auto exports from India is far a lower number. But most of the things like chemicals and all of that, I think will benefit in a big way from manufacturing.
So as we discussed that Indian economy, over a period of time, there might be some kind of a realignment of things.
Sure.
The way people will start thinking over a period of time. Maybe even as you said that China will maybe bounce back. It has started, slowly getting into that little normal kind of a mode and everything.
Sure.
But people will re-strategize how in times to come, if these kinds of things might happen, that we are not very much dependent upon just one source, and that being China. So if this is the fact, what is happening on the stock market front is that Indian stock market is completely mirroring whatever is happening across the globe.
Sure.
So whatever happened on Friday, whatever is happening on Monday today.
Right.
So it is more of the mirroring of the global cues.
Sure.
So do you think a time will come then by which Indian market would be rated or looked at in a different light than the other markets?
Sure.
So if things go down elsewhere, people will appreciate that certain sectors, certain stocks, certain parts of the market will do good in India, and it will not go in tandem with whatever is happening globally.
Sure. So I think if you look at data points, it suggests that India is any which way outperforming some of the Asian peer sets that we have currently. Also, if you look at from a currency standpoint perspective, our currency has been fairly stable in a time like this. And if you look at some of the currencies in Brazil, some of the other Asian currencies, they have depreciated aggressively to the dollar, anywhere between 10 to 20%. India at that time has held its ground pretty stably. So I would say that from a perspective of how India has performed in the current environment, I think it's any which ways outperform most of the other emerging markets. I mean, China is actually, for a change, not corrected at all significantly, right? So because I think everyone internally believes that the government is going to be more swifter in terms of policy action, and we've seen what China government has announced, that no banks have to provide NPA for any loan that is given within Wuhan. So I think government itself in China will move very, very swiftly as and when things come back on track, and hence Chinese market kind of not corrected substantially as compared to most of the other markets as such. India in that context, in my view, has done very well both on the market side of it and both on the currency side of it. It's also to do with the fact that we as a country today are not getting impacted in a big way because of this crisis. And if you look at most of the sectors today within India, whether it is say the consumer space or whether it is private banks, within private banks retail, I think we haven't seen any significant disruptions in the month of Jan and Feb. On the QSR side, on the food side, we've seen some bit of disruptions, but that's very, very small. But largely within the consumption space, we haven't seen any signs of panic on the channel checks that we do on the ground, that people are not buying or people are just not moving out of the house. So that kind of panic is not synced in India as such, and hence I think impact is far lower and India will outperform. On the contrary, as things improve globally, I think India will be the first one to take off in my view.
Okay.
Because I think from a perspective of the consumption part of it, if you look at, or whether you look at from any other sector apart from IT, I don't think any other sector will get impacted dramatically in India. Auto, yes, has got a bit of impacted, but any which ways we are in a BS4 to BS6 transition, right? So any which ways, you're not going to see substantial amount of growth in sales volume either ways, that you will have, because of this issue you had a significant downgrade in earnings. But my sense is India will outperform, has already outperformed on the market side, on the currency side, on each and every sector. We're not seeing any kind of stress so far. unless until the situation worsens and you have a crisis coming within the country itself. But these are things which are evolving very fast, and hopefully, fingers crossed that it should not come to India as such.
So the India fundamentals of what you say is that the India fundamentals or fundamentals which are centric to India would get appreciated on the stock market over a period of time, and we might not be always moving in tandem with the way the global cues are.
Absolutely, and we've seen that in the past. India has always fallen by about. I mean, India's reaction has always been about 0.7x of the global reaction whenever such kind of epidemic happens, whether it is SARS or any other epidemic happening in the past. We've also seen, in say 1918, I think 1918s or 1920s, there was a big epidemic. I think it's a Spanish influenza, which is what a lot of people are kind of referring to and trying to devote history to. But 27% of the world population was impacted. 5% of the world population had fatality at that time. And even at that time, you look at it, when that thing kind of got subsided, the following 4-5 years was massive growth across the world, right? So when things settle, I think there is a significant amount of recovery for the foreseeable 3 to 4 year period. And I'm not saying that what happened at that time will happen this time, but these are historical events which we all keep referring to, whether it is the Spanish influenza, whether it is SARS. In any of those cases, India has done far better. And once these epidemic kind of got resolved, I think the journey has been very, very stronger as such. So I am extremely optimistic, that we've handled the situation fairly well, I would say, and I am extremely optimistic about how things will improve. In fact, the only sign of worry for me, if I would put it that way, is a lot of small scale enterprises or SME, if I would put it that way, are still dependent on China. Right, and if they don't get the supply, typically there can be a bit of distortion there, where their cash flows kind of get impacted, and we've seen same thing happening in China. So China, the large companies have already started operation, the SME is not started yet.
Okay.
So SME continues to remain a bit of stress, and in India, a lot of unorganized market would still be dependent on China, and that can get impacted, which is actually good news for some of the large companies within the consumer space where the unorganized market is very large. So they will have some bit of market share gain to clearly grab in the next couple of quarters before these guys come back to normalcy in terms of their operations. So I think that is an advantage to the listed company. But yeah, from a perspective of stress, I think a lot of people who are buying from China and on an SME scale, there could be some cash flows issues in the near term.
So if there are some monies which are lying on sidelines,
yes.
Are these good times to deploy this money? Their money is lying on the sidelines, waiting for opportunity to be shifted to equities.
Sure.
So, would you rate these opportunities or these times as good times to transfer those monies into equities?
I think absolutely. I think these are black swan events. I don't think anyone can predict what's going to happen tomorrow. But my sense is that when things settle, I think there's a substantial amount of reversal that we will see, in the equity markets, and these are low-hanging fruits clearly, to be grabbed. Having said that, whether market can go further down from here or market will move directly up from here, I think it's anyone's call because this entire situation is evolving. But I think these are great times to buy, right? Okay. We've corrected by almost about close to 7-8% now. This is a great time to buy from the peak. Globally, we've seen whenever such things happen, the globally, markets do correct anywhere between the range of 10 to 14% on the developed side. And within India, it's about 0.7x, so it's about 7-8%. So we're very, very close to those levels, right? So, maximum you can fall by another couple of 2 or 3%, assuming things remain where it is. Right. So my sense is that these are great time to buy. One should really use these falls to their advantage. I think from a 3 to 4 year perspective, there is substantial amount of returns that one investor can watch out for.
And for the investors who are investing in the stock market on a sustained basis, maybe an SIP kind of an investor, which is, as we know, is maybe an 8,000 crore,
right.
Money which is coming to the mutual funds,
right.
as such on a sustained basis.
Right.
Do you think that they need to in any way rethink, re-strategize, or re-look at all these things on the basis of the fear and the news flow which is coming day in, day out?
Sure. No, I don't think so because, as I said, if China things are improving, which was an epicenter of this, right? Then I don't think there is anything unless and until this really spreads, across the world to every part of the country, right? Then I think things can get a bit worse before getting better. But my sense is, if there's an SIP investor and if he's going to invest for 4 to 5 year view, I think these are great times to go shopping, I would say. So I would not, in fact, I would very strongly recommend them to, increase their allocation in terms of the size also, right? Because these are great times to take benefit of, right? So I think a lot of people have a lot of misconception that, everything in China has come to an halt and, what is going to happen, things are going to be very, very bad. I think central banks will also move very, very swiftly. I think US itself is forecasting now 50 basis points of rate cut. So I think there will be a lot of liquidity which will come back into the system. And clearly, I think if this gets contained, at least in some of the other major markets which is kind of got spreaded into, then I think the recovery also will be, I would say, in the next 3 to 6 months we should be back. So I would say that an SIP investor, a SIP investor should continue and should make the most of entire fall that we're seeing in the current markets. I don't think this is going to remain for the next 2 or 3 years. Whether it remains for 2 months or 4 months is anyone's guess. But these are great times to buy, and we've seen ample of historical evidence about this in the past, that whenever such kind of corrections have happened, the foreseeable 3 to 4 years have been very, very strong across the world, I would say.
And any kind of predictions that we can make as to the impact of all these things would be more felt on the large cap, mid cap or small cap kind of according to those kinds of market capitalizations. This particular market capitalization might get a little more impacted, and this particular market capitalization related stocks might get less impacted. Any kind of take on that that we can make some predictions or something like that?
So my sense is that large cap companies typically given the size of operation that they have and the kind of reach that they also have some of the other alternate sources that they keep trying at just because of the size, and hence for them the impact might be slightly lesser. And they have a very strong balance sheet, most of them, to kind of withstand that kind of shock. On the small cap side, I think the fatality can be slightly on the higher side because they don't have great strong balance sheets. So any impact in the near term can have a substantial impact on their earnings, right? Some of them are also leveraged, right? So you have to pay interest costs, you have to pay your employee costs and all of that, but your sales are not happening. So there will be negative operating leverage playing through as well for some of the small cap companies. I think mid cap remains in the sweet spot because mid caps by definition is, according to the SEBI criteria, is now about anything between 8,000 to 30,000 crores, right? 101 to 250 companies. I think that continues to remain in a sweet spot, primarily because, first of all, they are not even extremely larger in terms of size. So yes, they are, somewhere in the range of 10,000 to 20,000, 30,000 crore kind of a size. So they have decent balance sheets to absorb that shock, right? And at the same time, they have a huge opportunity for gaining market share, right? So I would say they are actually in a very sweet spot in terms of how things will evolve once things recover. I would say mid caps will give you the far higher return as compared to large caps.
Okay. So any portfolio or any incremental money, if they are more focused on mid cap kind of a thing, it might have a little better sense looking to the way the things are positioned as of now.
Yeah. As and when recovery comes, I think mid cap will give you far higher return as compared to large caps as things stand. But if anything comes to India as such, then things will be far different.
Then things will be.
This is assuming that nothing comes to India.
Yeah. And maybe there could be certain small cap companies even who are into some specialty kind of things.
Sure.
Where they are, as you said initially, that they could be an alternative to China and those kinds of things.
Sure.
Which are as such not that of that bigger scale.
Sure.
But they are got those specialty chemicals or those kinds of industries.
Sure.
Where they have got certain advantages, where earlier they might be facing a little challenge.
Right.
Now they have an advantage because
Absolutely.
China is no more so active in the market.
Sure.
They might have advantage.
So within each of these large cap, mid caps, there will be exceptions where some of these small companies will also tend to benefit. Like for example, API prices are 25-30%. Now if you're an API manufacturer, right, essentially whether you are a large cap, mid cap or small cap really doesn't matter, because your selling price would have gone up, you would have 2 or 3 months of inventory, you make a substantial amount of return in the near term, right? So even if you are a small cap, you will make a lot of return in that case. So it depends on sector to sector, clearly. I mean, there are a lot of small caps within IT space, which depends on, I would say aerospace for large part of their revenues, right? Now, if airlines are not doing so great in terms of, because they're losing a lot of revenues, essentially they will also kind of look at cutting costs, right? So those small cap companies might not be able to do well. So it depends on which sector you're looking at. But I would say yes, from a chemical perspective, yes, there can be some opportunity. Some opportunity can be there in pharma. The other problem in all of this coronavirus thing is there's no antidote which has kind of come through, right? So I mean, there are a lot of articles which say that, there have been some solutions around it, but not crystal clarity around it yet, that whether you have an antidote which is clearly going to be solving this problem. So if you get an antidote, then I think things, any which way subside, the fear psychosis kind of really come off substantially. So in fact, if you look at Wuhan itself, contributes only 5% of China exports. Of that 5%, this is on a countrywide basis, but if you look at sectoral breakup, about 20% of the auto export that China does come from Wuhan.
Okay.
So I think if there's any other sector globally which to get impacted, it can be auto, and to a certain extent, some of the electronic stuff, which also comes from Wuhan. But otherwise, if X of Wuhan, if things stabilizes, then I think things should be fine in India, I would say.
So this will make the life of the fund manager a little more complex.
It's an opportunity, right? It's an opportunity for us. So
yeah.
I think how well you grab this opportunity. As I said, these things are not things to be. We're not happy about the situation. It's extremely unfortunate, but I think we have to make the most of this kind of opportunity in the fall in the marketplace and take most of the advantage of this. So yeah.
But then I think you will have to rejig the way maybe you would have been looking at certain stocks and certain sectors.
Sure.
In light of whatever has happened.
Sure.
Relook, maybe revisiting those strategies maybe.
Absolutely. So I think we did that analysis on our portfolio level, and I think we are extremely better off. I would say on the portfolio level, we don't see more than 10% of our companies getting impacted, because of this issue. However, if this accelerates over a longish period of time and comes to India, then it's a different story altogether. But as situation stands, we don't see more than 10-15% of our portfolio getting impacted because of this. And even if there is impact on those 10-15% of the company, I think it's very, very small as such. On the flip side, there are a lot of advantages on the portfolio side, right? Decline in crude prices, decline in raw material prices on metals and all of that. I think clearly there is a lot of advantage on the raw material side, which I think a lot of our companies will benefit, from it. So I think our portfolio is completely, better off as compared to, what the broader market is.
So in this, if I may call it the Friday bloodbath, this is a little good news that the strategy of the fund managers,
sure.
Like your asset management company and you, that how to get insulated
sure.
from whatever is happening in the market in general.
Sure.
So that is definitely good for people who are investing through a route which is a structured route where fund managers are involved and who can
sure.
understand and comprehend the impact of what would happen, what would not happen, and how to foresee the future in terms of investing.
No, absolutely. Because if you look at even within, since the time this event has happened on 23rd Jan till now, and whatever fall waves happened on the last Friday, I think all our schemes within our mutual fund business, within the MO, Motilal Oswal schemes, all the schemes have done extremely better because we follow the QGLP methodology, right? When you're buying quality names which has structural growth and has longevity of growth and at the right price, I think you tend to outperform in a falling market like this.
Okay.
So all our schemes will tend to do very, very well in a falling market like this, right? And I think clearly quality is going to stick around at this time, right? Things which are non-quality will fall very sharply. But if there is quality of business, quality of management that we aspire to hold, then I think things will be extremely, extremely better for us. So we are actually seeing good times. These are actually good times for us from a performance perspective. But I think what we need to also focus, and I think we are extremely ready, is the opportunity that lies ahead because of this disruption, that we are seeing in the marketplace.
So on this positive note that maybe the market is falling, but active fund management
sure.
is now showing up that the active fund management can really create value.
Sure.
So on that optimistic note, I thank you very much for
Thank you so much
giving
for
a
having me here.
fantastic insight of the economy, the sectors and the stock market and investing, a 360-degree perspective. So nice of you.
Thank you so much.
Thank
Thank
you
you so
very
much.
much.
Thank you so
you.
much. Thank you so much for
Thank
your
you.
time.